Have you ever wondered where your stop loss should go while placing a trade? In this trade recap, I'm going to show you where to place your stop and why it's so important to place it at the correct position. So to quickly introduce the trade, this is a rejection of the previous day close just below the VWAP on AAPL. So what has happened is AAPL opened very weakly, selling off. And then it very quickly came back up to the VWAP, back up to the previous day close, which is this black line, and it rejected there. And my trade theory is to take it short here and have it come back down towards the low of the day. So what I'd noticed is in the pre-market, there was an area of resistance here right at the previous day close, which suggested there could be a seller there. And the other thing I noticed is the volume, as we see here, as we go back up to the previous day close, even though the bars are getting bigger, the volume is pretty consistent. And then when we actually reject at the previous day close, the volume is the same as that big green bar right before it. So if the big green bar before was lots of buying, in order to have a smaller green bar here with this large wick at the top, there must be selling there. So that's my kind of trade theories. This rejection here, there's a large seller, so I think the price is going to go back down. Now, in terms of stock placement, my idea is to get in here right as it breaks the low of the candle that rejected. I could put my stock here. It would be very tight stopped, right above the open of the current candle, and I would get a very good risk to reward of this. If I was going to get this to go back down to the low of the day, that's going to be like a 7 or 8 to 1 risk to reward. But the problem is my stop actually needs to be up here because my whole trade hypothesis is that there's a rejection of the previous day close. And so my trade is invalid once that isn't true. So if the price was above this line where my stop loss is, then that means I was wrong about my trade and I should get out then. So let's take a look and see what happens here. So I get in here, and unfortunately, because my stop is further away and means I'm only going to get a 2 to 1 risk to the reward. And I put an order here so you can see where my stop loss is and where my profit target is. And look at this. You see, price actually does go against me, and it goes back up towards that previous day close. But again, there's that seller there, and they're protecting me from being stopped out. So even again, it goes up a little bit. It heads towards that closing, it'll get stopped out, but no, again, it rejects because my hypothesis was correct. There is a seller there. The timing could have been better, but the idea and the methodology of getting in this trade was right. And that's why having a correct stop placement is so important. It is what tells you whether your trade is correct or not. And you shouldn't get out with your trade until you've been proven wrong. All right, I hope you learned something today. Happy trading. Invest a lot in the markets.